All right. Good evening, good morning, good afternoon, wherever you are on this beautiful planet. Welcome to the Inner Circle Live Asian session. I'm your host for tonight's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage, and we're definitely happy and grateful for all of you being here with us tonight as we take a look at the technicals and the fundamentals in the Forex market to see what we can take advantage of. So without further ado, let's make sure that we turn off any and all distractions. Grab a pen and paper, take lots of notes, and let's make sure that we participate and engage as we take a look at the setup. So if everybody can hear me loud and clear, let's participate right away. Drop me a 1 in the chat. Let me know that you hear me loud and clear and that you're ready to go. All right, so we've got people joining us. Welcome, everybody. And just as a reminder, hey, everybody has control over their microphone. You guys do an amazing job. But hey, if you're not making a comment or asking a question, let's make sure that we do our best to keep our microphones muted out of respect for everyone else. All right, so let me log out of here. Ryan, good evening, sir. How are you?
Benny, good evening, bro. I'm doing well, man. Glad to be here. What's up, everybody?
Glad to be here too, and I'm glad you're doing well. So, hey, U.S. producer prices rise for the first time in 3 months, went up 0.4% month over month of September, the first increase in 3 months, and twice the market expectation of 0.2%. Cost of traveler accommodation services and food made the biggest upward pressure. Meanwhile, the annual producer inflation rate fell 8.5% on 8.7. The core index rose 0.3% on the month and 7.2% on the year, both in line with forecast. So tomorrow is going to be interesting because we've got CPI data coming out at 8:30 a.m., CPI month over month, CPI year over year, and core CPI. So that's going to be interesting as we take a look at the dollar index and we see that we've got a little double top action going on right here on the daily chart at this 118, 127 zone. So the question becomes, as the data is released tomorrow, do we see a dollar sell-off or do we continue to hit that extension and move higher? It's going to be quite interesting because you have a level of resistance, daily resistance at this level. It's fascinating how these things start to line up before important reports come out. Everybody's looking to see, has this inflation monster started to peak? Well, we'll look at that CPI data tomorrow and we'll see what happens. So that's where we are in regards to the dollar. Okay, so we've got today, we had the GDP, right, showing that the UK economy contracted a bit, negative 0.3%. Things starting to tighten a little bit, certain areas. For the pound, okay, industrial production month over month down, negative 1.8%. Manufacturing production down 1.6%. Folks are feeling that squeeze from inflation, okay, starting to see that come through in the numbers. So the GDP showed contraction, all right, so plays into those recessionary fears. Okay, PPI for the US, again, we saw that article, 0.4% on a forecast of 0.2%. And we had the FOMC meeting minutes released from their last meeting. And we see here that less jobs before the Fed stops. Okay, less jobs before the Fed stops, right? So there's some pain coming. Okay, still. Fed minutes, what else did I want to see? Oh, Fed officials, right, based on the minutes, saw the cost of doing too little to fight inflation outweigh the cost of doing too much. Okay, so that was their take on it, and now they're aggressively hiking rates. So pay now or pay later, printing all that money, either way you're gonna pay, and that's what it's boiling down to. So look for the Feds to continue to hike aggressively to get that target down. So we may find out that in the near term, the inflation rate is peaking, which is cool. But now, right, we still got to fight that battle to get it back down between that 2 and 3% range. We talked about it, the IMF forecasting for the United States by the end of 2023 for inflation to get back down to around 3.5%. So we'll continue to monitor that as we move along. Okay, so CPI, other than that, we got G20 meetings going on. Always can be day 4 to IMF meetings, G20 meetings, day 2. So you never know what can come out of there in regards to what important people are meeting, and the comments that they make has the potential to always move the market. So we'll continue to watch that. And then Friday, the cycle continues. It's reciprocal, right? Core retail sales month over month, and University of Michigan consumer sentiment at 10 a.m. on Friday. So lots and lots and lots going on as we move into this fourth quarter of business. Something else. Japan producer inflation highest in 42 years, no doubt. Australian shares climb on bank boost. I have to read more about that. Ryan, anything out there going on that you might have caught today?
Not too much. Waiting on the CPI data. Also,
Yep.
what I'm reading, everybody's looking at and waiting on. So
yeah. I saw some of the webinars earlier. Tanya, hello. Some of the webinars earlier, I saw some folks starting to fade the dollar a little bit. Take some small positions on fading the dollar. So we'll see how that plays out for them. But
I hear it, but
yeah,
I think even if the CPI data comes in below,
yep.
I think any retracement is going to be temporary. So I think the Fed is still going to double down on what they're doing. So I don't see any long-term reason to be fading the dollar like some of these investors are looking to do.
Yeah, right. Short-term corrections. That's about it, I think.
Yeah.
I'm with you on that one. Yeah. So we'll see what happens tomorrow. That'll be interesting. So everybody, we are going to talk about this tonight because we get questions, right? Especially folks that are newer in the group, because we always hear that, right? Especially in the beginning about trading with the trend, against the trend. You shouldn't trade against the trend. What are you doing? And we're used to hearing it, right? Been doing this for years now, so we know that's going to come about. But we understand, right, where our sweet spots are in the zones. So since a lot of these pairs are hitting those extensions and hitting those exhaustion points, we are going to talk about that a little bit tonight as we navigate. So, but first, all right, for our newbies, now everything I'm going to cover is in the training. So make sure if you're new, you're getting that back office, right? Watch those videos, right? We track that watch time and it's not where it should be, right? So definitely invest in yourself and take some time out to make sure that you check those videos out. It's well worth it. Okay. So when we look at our zones, all right, we take a look at our zones that we like to trade as it relates to the Fibonacci sequence. There's only certain spots that we like to trade. Okay. So we're going to do this in a downtrend. Okay. And we know, and we have to at least come to the agreement, like we always say, that this market moves in waves. Okay. ABCD waves. Let me start this over because I got this level. Okay. So, like this. So we're going to do an ABCD wave to the downside. Like that. Okay. So we've got our A, B, C, and a D. Just like that. Okay. And we see it as we go through the charts. Tuesday, Wednesday, Thursday, Saturday morning, we see it happening over and over and over again, that ABCD pattern, right? Some short, some long, some move faster, some move slower, but nonetheless, right, the market moves in waves. So We have our fib that we draw from the A to the B, and we have certain areas that we like to trade. Well, if we are trading with the trend, we love for price to push high in the zone, 50 with structure, 61.8 or higher. If we are trading with the trend, right? Lower low, lower high, lower low. Trading with the trend, okay? So we want to sell up in this zone. We like to sell in that zone, so to speak, okay? This is our sell zone, right? And this is how it sets up, okay? And we say, hey, depending on the type of trader you are and how you like your stop, I like wider stops preferably. Especially when I'm swing trading, I love a wide stop. I want to put my stop above the A. Because if it doesn't take out the A, it has no choice but to go your way. All right. So once it comes into my sweet spot zone, it can dance around all it wants. As long as it doesn't take out that A, I expect it to reverse and head to its respective D extension. Okay. So you see it set up like this, right? Where we have that that down push zone like that. So we get 61.8 pullback, 50, 61.8 pullback. We expect a 1.618 D extension. If it moves higher to that 786 zone, it correlates, right? Smart fibs make it super simple. You can design your trading view fibs to look the same, right? Not do the same, but look the same. Do it manually. So if I get where the market takes back 78% of this AB move, I expect a 127 extension. 86%, I expect a 1.8 exhaustion point. Okay, that's how it goes. Now, that's with the trend. Everybody follow me, drop me a big 2 in the chat. All right, awesome. Okay, so there we go. ABCD move, sweet spot in the zone. Okay, now, because why? Because it's not go about this area, right? It just gives us a really good risk to reward, right? So people eye that zone. Okay, now the key with trading the reversal setup is we have to know what how the sequence flows. So if I have an AB boundary, I get a push to a C, we hit that D extension. We have to know that eventually, once this D extension is hit, wherever price settles and forms a swing low, in this case, right? That 5 candle combination that we talk about, that swing low, because what does that do? When that 5 candle combination forms, that gives us a low of support, okay? And that gives us the reset button, okay? So we talk about that 5 candle combination, right? In this case, that swing low, right? That we see and we identify on the chart, okay? 2 to the left, 2 to the right, that are higher than our center candle low. Okay. Here's our low. 1, 2, 1, 2. That's a swing low. That's going to give us a form of support. So once that D extension is hit, it can overextend, right? And keep moving. But wherever it forms that first swing low, that's going to be our new support level. And that's when our C becomes our new A and our D becomes our new B. What does that mean, everybody? We get a new fib. Okay. And so if we have a new fib, and this is now that C becomes my new A, like so. All right. So this is my new A, and that old D becomes my new B. Somebody tell me, either in the chat or take your microphone off mute, what are we looking to happen next?
Retracement.
A retracement, right? Retracement, a correction, a pullback, okay? Like what happened here. In this case, it pulled back right off the B boundary. Here, it can pull back right off your B boundary again, okay? Or, okay, sometimes it gives you that slight pullback, that 236, bears aren't done yet, and it pushes you down, okay? And then this zone that we call our 80-20 zone, oftentimes we see price reverse incorrect, okay? So we understand this is how the wave sequence works. Is it perfect? Nope, right? But we see it happening over and over and over again, okay? Will you win 100% of your trades? Oh, right? None of us be on here, we'll be somewhere out on the island hanging out, okay? If it happened 100% of the time, it doesn't, right? That's trading, okay? So C to D, sweet spot. B to C, sweet spot. 118, 127 zone out there, shallow retracement, sweet spot, okay? Why am I going after this? Going over this, I mean, because if you miss, right, that move with the trend, okay? If you miss that move with the trend and you can't get an entry on it, patience pays. Why? Because just wait for the trade to hit an extension and exhaust. Wait for the game to reset because it's going to give you an opportunity to play the reversal. Now, we're drawing, okay, this on this diagram as a straight line, okay, as it retraces or pull backs or corrects. That's how we're drawing it up, right? But we know in essence, it really, right, moves in waves as it moves up, okay, like that. Okay. When we get the reversal, it's going to move in waves, okay, not a straight line. That gives us opportunities, okay, because now I know where this sweet spot is for the counter move. I can look to potentially buy the ABCD waves as it corrects to a high price, okay? That's why we trade it. Everybody got that? Drop me a 3 in the chat. Okay. Same thing in reverse, right? If we looked at a bullish setup. Okay. Now it's just a matter of, right, using some solid technical analysis, support and resistance, recognizing that trades are exhausting on time frames. So, yep, on our longer term move, for example, on this Aussie CAD, on the larger wave, we still have a ways to go to get that extension. But we all can see that once we hit this C, which is our highest point within the AB boundary, and this particular play is here, it has moved down 450 plus pips. But it didn't move 450 plus pips like this. We can clearly see even from the daily time frame that is moving in waves. Okay? And you can see here with support and resistance, right? You hear it all the time, right? People put the videos out, quick 5-10 minute videos on YouTube, break and retest strategy, right? Well, when you look at it, we broke this level. Are we going to come back and retest it? Well, this is on the daily chart. On your lower time frames, if that corrects, correct close to 100 pips. Okay, you can take advantage of that because we understand that the market moves in waves, right? So if I come down here to this Aussie CAD, for example, D extension got hit. Okay. Look at it. A, B, C. D extension got hit here. We look for that first swing low after the D extension is hit. Okay. 1.618 target hit. Where's that first low? Boom. Our C becomes our new what? A. Our D becomes our new what? B. And the game begins again. So these represent an opportunity. So whenever, and it works in cycles, whenever I see a currency and it's moving like the CAD, and they all, for the most part, exception of like the Aussie NZD or whatnot, they're moving, and I see that they're all starting to reach exhaustion points, right, around the same time. You gain understanding that, hey, this thing really just moves in cycles. So whenever I see this, I could come down to my 1 hour, my 15-minute time frame, like so. Okay, see this here? Start drawing your trend lines. Because if I know that the extension got hit, and we're now moving towards forming a low, which is going to be my new B, those represent reversal zones. See that? Does everybody see what I just did? Yes or no? Yes, no?
Yes, sir.
Okay. The market does the same thing over and over again. Right? Those of you who've been with us long enough know that. So this here, if you like to play this off the B boundary, right? I like the 80-20s, but I'm not biased. If I get a trend line break and price starts moving, okay, I'm looking for that setup. Okay. You don't need any type of fancy equipment to see this on a consistent basis. So now I've got a break. What I'm going to do is I want to see this come back to me. Like so. You might be an aggressive. Some people, aggressive off the trend line break. I'm just going to take it. Boom. All right. That's cool. Work your risk management out. Put your stop below the low. But the market moves in waves. I can wait a little bit because I can let this come back to me. See if it'll come into my zone. And see if it'll hold and see if I can get the break. It took off. Okay. Market moves in waves. I want to see it pull back. Correct. Okay. Then see if I can get long. I just want to know where the high probability reversal zone is on the play. That's it. Okay. That's it. That's what I want to know. Right? Now, this is a B boundary play. So what is it going to do? Well, I'm going to work my risk out. What am I risking? 1/4%, 0.5%, 1%? What am I doing? If this setup comes to my zone, well, I'm busy. I don't know if I'll be around. Okay, well, either trade small, put you a limit, buy limit, or just use a horizontal and put you an alert on so that you are alerted when the trade comes back into your sweet spot area. Work your risk management out, put your stop below the A. And if you get your break, right, if you like that additional confirmation, hey, I need my stochastic, in the right zone with a trend line break, then you take the trade. That's the process, and you live with the results. And you do the same thing over and over and over again until you get super consistent and you get the results that you're looking for. Okay. And you find that edge. That's it. So look, this is what I know. I know I don't have to win every trade to make money. If this trade comes down and stops me out, well, I am playing this early off the B boundary. I'm going to take this 4-hour fib here, and I'm going to take it down to the 15. If it takes me out here, then my next zone is this 118, 127. It's going to push lower, which means what? It'll probably push down. Okay, like so. And then what happens? Because of the waves, it'll probably enable me to have an inner trend line of sorts, like that. And if it forms a low and it breaks and it forms a high on the other side of that trend line and it pulls back, I'm going to look for the move again. That's how we play the reversals. We don't try to control the market. We just let the market flow. That's it. That's how we play it. Because, hey, at the end of the day, we say it all the time. If you're sticking with the trend and you're bearish on the Aussie, you want to see this correct anyway in this direction. Why? Because I want to see this price swing higher into the zone so I can do what? Trade my sweet spot on the short. Right? That's what I want to do anyway. So I need price to correct. I need price to move in this direction so I can get a better value for the short. Buy low, sell high, right? I want this to push high in the zone so I can short it. But in the meantime, because we understand the sequence, I know that these are high probability reversal zones. That's what we do. Questions?
Hi, Benny. Just a quick question. You know, for example, if price reverse to the 1.27 level and there is structure, what do you mean by that structure?
Oh, with structure, which means like sometimes you'll get it right. For example, I'll show you on the opposite end. So you see how we got this daily level here? See that there?
Yeah.
That's so when you hit those resistance levels and things like that, like here you can see, you see this 4-hour? That's a 4-hour I have in purple. Yeah. So that's what I mean by structure. You see the structure here to the left, right?
Yes.
See all of this here? That's what we mean by structure right here.
Okay.
See that?
Thank you. Yeah.
So yep. So that past support becoming future resistance. So that's what that relative, the way we teach you guys how to look at near term, right? Support and resistance by looking at those swing highs and things like that. So if I put this resistance in, right, those resistance levels, a lot of times where you see these resistance levels, right, in what I like to call the near term, because if I go left, that's in the past, right? So we could just say the present. Okay, so right here, my present resistance level, oftentimes that formed a high right here, because if you locate it and you scroll back, oftentimes there's past levels there, right? In the past at some point, right? See how we come back here? Have a swing back there. So that's what we mean by structure, that there's a past level that price is respecting. So if you say, for example, had this pair and it pushed down to this 118, 127 zone, and there was from our higher time frame markups, there was a weekly level of support sitting right in that zone. That's just additional confirmation that, wow, okay, I've got the fib sequence giving me a 127 level there, and okay, I've got a weekly support. So that's what we mean by that. So
thank you.
You're welcome. So anything that can strengthen the possibility of that being an area where price may reverse, right? In that case where buyers may be sitting. Why? Because in the past they were, right? We saw a reaction at that level based on looking left on the chart and based on our top-down analysis. So we're looking for reaction areas. Okay. Yeah.
So just a quick one. Is it also possible to say that, for example, if the price is at the 1.27 level with that structure there, and you want to go long, and there's another structure in front of it as a resistance, is it a good idea to go long towards a resistance, or wait for the price to break the resistance before you can go long?
Either way, right? It depends on what type of stuff you're looking for, short term, right, or the long term, right? So if you have, say, a resistance level, like a strong, like say another weekly resistance level there, right? You have to make that determination as to, okay, what I mean by the type of stuff you're looking for, how many pips am I looking for, right? So maybe am a type of trader, just a break and retest trader to the next level, right? So there's always levels in between. And so some traders will take the break, right? It'll push down like so. Let me get this out of here. So it'll push down, and they may look and say, you know what? This here is 82 pips back to that level. I only want to trade it back to that level. So if I can drop down to a 15-minute and I can catch a trend line break in a correction to get in on that trade, I'll take it for 82 pips and I'm done. Using a Fibonacci sequence, right, lets us know that the long-term projection for that could be this 382, because we know that price loves to fulfill that 382. You get what I'm saying? So it just depends on your tolerance as a trader. But you could definitely just take it back to the level, or you could say, right, the other half of your question, you could say, you know what? I've got, okay, 339 pips back to that 382. So I've got time to wait for this price to break that level and retest it, and then I'll get long. That's totally up to you as a trader. Those are excellent questions that you asked. Excellent. Right?
Thank you.
You're welcome. So maybe you say, hey, I want to see, right? I want to see that level get broken. And the retest of that level, that'll tell me that I want to continue long to the 382 or higher. Because these are big moves, right? So you never have to be in a rush, right? Never have to be in a rush. So if you want to see a little bit more price action to the upside, see it break through some resistance levels, that's okay too, because you know what it's going to do? It's going to do it in waves, unless you get something crazy like what came out of the UK government, where the market dropped 1,000 pips, right? That's rare. Okay. So great question. But all along these levels, right, you're going to find levels. Okay. And we know the higher time frame levels are strong. That's why we bring them from the top down. So great question there. Any other questions?
Real quick, Miss Tabitha, you said you might have missed something. Talk to us. What do you think you missed?
Oh, I'm good. It was just that as he was talking and he then went back a little bit and explained the other part, I was getting it. I just know I need to like go to the back office for a couple other things that I know that I need to go back and study. That's all. And just he's as you guys are steadily giving these live suggestions and ideas of how to trade, it actually helps enhance a lot of the back office stuff that you are having the basics in. So I just like to go back to the basics to make sure I have it down pat as you're explaining things kind of like in college. So same thing. Got to read the textbook over and over again until I get it. So I'm good.
Absolutely.
Thank you.
For sure. For sure. Don't hesitate to ask questions though, right? We want to make sure that when they come up, we can walk you through it, and then you can go back and study too. So it's open forum. So don't hesitate. And that's for anybody, not just
Sure.
the questions are going to come, and we welcome that. We want you to ask those questions so that we can break it down to you and show you and give you different ways to look at it so that you can process it. So cool beans. Thank you.
Appreciate it. Thank you.
Absolutely. So that's so you can see here, right, on this Aussie CAD, right? You see this AB boundary, and then you saw the correction, right? 200 pips. Okay. You saw this one. Okay. It pushed down, shallow retracement, came into that 118, 127 zone before making a correction. Okay. Okay. So you see it, right? It's just a matter of do I want to play it? Do I like to make that play? Okay. Or do I like to wait for that high price and then continue with the trend? Or do I like to do both? Right? Do I like to do both? So that's that there. It doesn't look like much, but we're on a 4-hour chart. See? So you can see that starting to break. So now it's just a matter of, hey, when it pulls back, is it going to hold? Am I going to get that ABCD wave? Then you start to see, right? If you're a day trader, you start to see the opportunities everywhere. Like, well, that sequence holds true no matter what the and a direction. So, hey, I'm up around this 118, 127 zone. I haven't gotten a 382. So price drops back to that 382. That's 20 pips. 61.8. That's 32 pips. See? Over and over again. Same thing. Okay. Same thing. So that's the Aussie CAD. Okay. We know that these Aussie pairs have been moving to the downside. Look at this. See, this is here we go. Here's one with structure just outside the 127. You see how you got that reaction? You asked that question right at the right time. Okay, and you see that reaction. I got a new AB boundary. It gave me a little swing, a little push, right? Off that initial move for 30 pips, but then it pushed down. Okay, if I was holding out for that 382, that one came back to me. That's fine. But I'm going to revisit this at this 118, 127 zone. I've got support here. Now look at the reaction that we got. So look, you go down the time frame, right? Or two. I like going down to the 15-minute off the times. And look at it. Okay. Let's scroll back. Let's drop our trend lines just for good practice. Off the high. Okay. Running down. Here. Okay. Look. Okay. See? See how price is pushing through and breaking that trend line, right? Okay. That's where we are. And it's moving along. So if this is my sweet spot, I want to see this price come back. I want to see it work its way back to me. Okay. See it work its way back to me. Get long. Okay. Maybe this is a inner to outer trend line play. Okay, we talk about that all the time. How when price breaks an inner trend line, if it's time for it to go, it loves to gravitate towards the outer trend line. Like that. What we're gonna do, just like practice, run the drill. Okay. Draw the play up, run it. And you may say, I don't want all of that. I just want an ABCD way, right? It comes back to my sweet spot in my zone. I'll take it to this here. It's 56 pips. Okay. So if it pulls back to my 61.8 or deeper, okay, now I'm looking at a zone like so, right? 61.8 or deeper there on that play. Okay. And let's take it to my respective D extension. There you go. Okay. So you could just play the wave, or it has the potential to turn into something larger if it's going to seek out that on this 1 hour, if it's going to seek out this 38 too. Okay. But you can see how things are starting to exhaust. You see how we hit this D extension on this forward and came into that support level? We're starting to see a reaction. That's what it's all about. Okay. So there's that 382 on the 1. Okay. So if we pull back to that 382, we've got 85 pips, 50 plus pips to that D extension. And that's how you can consistently find potential setups for yourself. All right. That's how you can do it. Okay. It's no different than if you wanted to play a, say you're looking to get short. Let me try to find something real quick. Where did I get a nice, that was a long time ago. But say you pushed up in your zone like this, okay? This is the weekly, it's a big move. Say you pushed up in your zone, and say this was a 1 hour or 4 hour, or even this weekly. It's the same method, right? When I push up in my zones and I'm short, then you can go down to your lower time frames, like your 1 hour, okay? 4 hour. This is a weekly, you can go down to the 4 hour. And then you're gonna look for trend line breaks and pullbacks, right? Trend line breaks and pullbacks to get you an entry on the trade. It's the same method, right? Except for with that type of move, we're looking for price to exhaust. I'm trying to find a good one. That was maybe it was on the yeah. Let's say this 4 hour here. Okay. And I'm gonna go to the 15-minute. Let me clear all this up. And we can go back on this past fib. And here we came into this 61.8. So let me highlight this and then go down and find it on the 15 here. Okay. So I'm looking for areas and opportunities to get in on this trade with the trend line break. It would be the same thing if you're trading with the trend and you're looking for an entry, right? So price action has since moved, but this move here would have looked something like this, right? Move it up through the zone. And you would have got your initial break. Okay. So then depending on how aggressive you get, right, drive it through its highest point. Okay. But there was that C. Think about that. That was that C that we saw in a higher time frame, and that's where price turned over. Okay. You can take it from the 4 to the 1. Same thing. But that's the method. Okay. Any questions on that? No? All right. So we come into and we look at let's see what the Aussie yen is doing, right? So if we come and we take a look at this, right? You see how price is reversing? It's the same thing, right? It's the same type thing. Look at the initial swing, right? And you got that crazy move, that reaction off of that resistance level, that daily level. But it's the same concept, everybody. Okay? It's the same concept. So it pushed lower. So we'll go to the more recent move. Okay? So we'll come down, draw our trend lines. Okay? Okay? That was that initial move that you got. Okay? Okay. So the initial move was here. You want to drop your trend lines through your lowest point. Okay. And at that point in time, this was your lowest point. And you got that break. See? Okay. This is your lowest point in the move here. So look at the break of your inner trend line and then look at price move. Okay. And we're trying to gravitate towards that outer trend line. That's the power of being able to find your zones consistently. And the fibs help you with that. And you can see it's moving, right? Almost to that 382. I don't think it got there quite yet. But it's moving in that upward direction because it's correcting. Price only moves in one direction for so long, right? It's gonna wave. And that's what we're seeing. That's what we're seeing. See the little move here? That's tradable. Here to the 118 after the shallow move. 118, 127, then look. Okay. It's tradable. Aussie NZD. That's going the other way. But we can see how year one, look at that. Okay. So we know how this has been. This has been an amazing swing out the 127 zone. Okay. Opposite direction. Think about it. It's just flipped over, everybody. AB boundary. Boom. Shallow retracement. Tried to turn, hit that 236. Pushed up to the 127. That's my next zone. Here's another example, right, of structure. You got a monthly level at 114.26. Right along with that 118, 127, we got a reaction. Okay. So we got a reaction to the downside. 250 pips or so that trade is down. You all have the skill set. You all have the training in the back office to learn exactly how to find these setups. There's no secrets that we're keeping. None. It's all there. Okay. It's all there. But you can see here on the 4, look at the reversal. Look at the trend line break and the waves, right? It's there. Over and over and over again, right? Okay. When you're seeing those posts, those before and after posts, it's all right here. It's all in your back office. It's all there for you to be able to do the same exact thing. Once you see it, you can't unsee it. There's your ABCD move there on the 4. Guess what? On the 1, it's exhausting. Look at what it's doing, right? Look at what it's doing. Once you get it, you start to find setups all over the place. So now it's moved down over 200 pips. It's playing around with this 111 level. Okay. If it breaks and closes above that level, it just may give you a wave up for a new high price before finishing its downward move. Okay. So look, hey, I can come down to my 15. Aussie and ZD is always typically a little choppy pair. But look, potentially have the same thing setting up. right? Okay. See, I was trying to find this way. Be patient. Right? This was always choppy, but it moves. Price action is the price action. As choppy as it is, if it's meant for it to move in that ABCD wave, it'll push up to one of those levels and it'll move down if it's going to continue bearish. Questions?
No, sir.
No.
Okay. Aussie dollar. Okay. Look at it. Look at how it reacts. Okay. Not all over the place, but look how that's reacting. Right. Look at how that's reacting. This is coming into the level. Look at what it did and pull back. Right. It looked similar to the one we just had. Okay. Look at the pullback. So that initial move, right? 80 plus pips. Now it's coming down, it's retesting. It's probably going to work its way back up again, but it's trying to correct. See, I was just sitting flat at the level. Okay. See, I was sitting flat. That's going to be a battle, right? Against that dollar. But think about it, everybody. Now, we looked at that DXY and that dollar's hanging around that level. Okay. So we'll see. If we get a sell off in that dollar and that double top holds and it corrects, even if the dollar corrects back down to that daily level that we saw, right? So if we go back to the US dollar, right? We go back to the daily. Even if we get a correction down, right, to that level, you may see that Aussie dollar push up. Just the ebbs and the flows of the market. Okay. Not necessarily due to Aussie strength, but just a dollar correction. Okay. Sell off to a lower price so people can come back in and buy it. Okay. That's it. But look at where we are. Okay. There's that daily D extension, 118, 127 on this 4. Somewhere in this zone, right? We can see that correction. Let's see what happens. Okay. See what happens. It's Aussie dollar. Okay. Look at something like the NZD CAD. You guys see it? I know you see it. Right? Look at it. See how we got down within this level? This didn't leave, right? It still lit up as an active fib because probably by a pip or two, that D extension is missing, but it ran into this monthly support level. But you see the reaction that we're getting? See the reaction? Look at the one. Ooh, smaller fib, classic 80-20, everybody. Look at the wave and look at the reaction. See that? So what do you do? Right? Break it down off the top. Boom. Okay. No, don't need that one. Zoom out. All right. Get a narrow one in there, but look, here we are. Oops. Bang. That was your lowest point. We just saw on a higher time frame that that was an 80-20. Right in the zone. There you go. Pretty cool, right?
Yes.
Awesome. Don't be afraid to make the play. My number one edge in the market, Ryan's number one edge in the market, okay, is risk management. Number one edge in the market is risk management. All of us, Casey, everybody, right? Her number one edge in the market is risk management. You see the before and afters, right? Risk management. I have a stop if that trade doesn't go my way. Right? Okay. Off the trend line break, it's up almost 100 pips. So yeah, there may be days where you sit back and you're like, man, I'm not trading. I'm not in the trade. Why is that? Because I'm waiting on my zone. I'm waiting on my zone. And it just happens, right? It cycles over and over and over again. Okay. Right? You see it. This one gave an initial reaction and it pulled back. I would love to see it push back to the zone. I don't know if it's going to do it. Right? But that new fib is the key. Right? Love for that to have double bottom. X moving flat after that initial reaction. Okay. Okay. Trying to think in my head some pairs that are hitting some decent levels here. Okay. So look. Okay. Just like the other dollar, it's going to be a fight, but you see how price is trying to react. Okay. Yeah, see how it's trying to push off that level. See that there? Isn't it crazy how the pairs act? So how many dollar crosses have we seen on a lower time frame where you saw this pattern? It's amazing. So look, the flat, the push lower. I push lower to that reversal zone. Okay. Ryan, what you think?
It's a beautiful thing, man. It's a beautiful thing.
It is.
It really is. No matter the time frame, no matter the asset class, the process is the same.
That's it. Patient. Wait on your zones to set up. Right? Spend time on your chart so that you can identify the opportunities. So you could be your own signal. That's true freedom. That's the freedom. Hey, I got this much money. I'm gonna put it in the account, and I'm gonna multiply it slowly but surely. I'm gonna multiply it. Okay? Pips and percentages. I don't have to turn my account to a slot machine because I know how to catch the pips and let the pips add up. Right? Think about that. The skill set is real. It's an awesome skill set to have, to make money from money. That still fascinates me to this day that I can get on a computer, click on a chart, and do my thing, right? And you can too, if you're willing to put in the work. Nothing that we're doing that you can't do. Nothing. And do it on a high level. Think about that. Didn't have to fill out an application and get access to a trading platform. Didn't have to submit a resume. Nothing. "12 interviews in a fancy suit." Nothing. It's power. Any questions before we log off for this session tonight, everybody?
No, just a great session as well, Ben. I know that's just redundant. You keep saying it's a great session, but every session seems just to piggyback off the last one. It's so good. And then I don't even know all the stuff you guys know, but I, I'm feeling it. I'm like, oh my gosh, I'm just excited. I can't even put it no other way. And I'm nowhere near where you guys are at, but I'm excited.
Awesome. We appreciate you being here. Appreciate you being here. It doesn't happen overnight, but it's possible. Our whole idea is to help you guys compress that time frame and shorten that learning curve. I hope we're able to do that for each and every one of you. Committed to being consistent. That's it. That's it. And you don't have to trade. Listen, trade a micro lot. That's a lot. That's 1,000 units of the currency. People don't understand that, right? A lot of times, especially when you're new. That's no chump change. Don't let anybody tell you that it is. Trade a micro lot. Watch that money add up. It's gonna give you better results than your savings account. I'll tell you that. If you learn the skill. Ryan, anything before we wrap it up, my man?
Got nothing to follow that, bro.
All right, hey, we're right back at it, being consistent. 6:30 a.m. Eastern Standard Time with my awesome partner, Mr. Ryan Carthage. Hey, we're so happy and grateful for all of you, as we always say at the beginning. We'll say it at the end too. Thanks for being a part of the inner circle. Have a good night, everybody.